Hello everyone and welcome to today's Daily Reports market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 13th. Well, I mean it could have been Friday the 13th on Thursday the 12th, to be honest. It was that much of a horror show for markets. But we saw huge selling pressure throughout indices, equity markets massively low, the biggest one-day fall on equity markets since 1987. Huge selling pressure, 10% broadly speaking, there or thereabouts, maybe even more for the DAX. But there's been a turnaround today. I'm not going to focus on the ridiculous ECB press conference where there had to be an addendum announced by the ECB post the press conference to correct a quite glaring mistake from Christine Lagarde. But still, we saw the markets are starting to build some support again, and that support is coming as the Federal Reserve has stepped in. Massive liquidity injection from the Federal Reserve, $500 billion of overnight funding liquidity proposed, but still they're saying that they can do more and more. Trillions of dollars worth of liquidity to try and free up any clogs in the overnight funding, which has caused swaps prices to fly through the roof. So that big dollar strengthening we saw yesterday, massive dollar rally that we saw across the board, has started to settle a little bit, but we still see that the dollar is gaining ground. Treasury yields are interesting. They're actually sort of hovering a little bit now. That massive fall in the Treasury's yields market has just stabilised a little bit, but it's interesting that we had that gold sell-off yesterday, similar to the one we saw on the 28th of February. Gold shot sharply lower yesterday. I'll talk about the technical implications of that move, but we are starting to see a little bit of a turnaround. Is it the bottom? Is it the point at which we start to see markets stabilising? Be interesting to see, because VIX volatility 77, pretty much 76, 77 yesterday. Now we need to go back to well, look at that, highest since 2008 in that move on the VIX. So really massive volatility playing out through markets, and to be honest it's still there, but we're at least on the positive side. You've got a basis of risk appetite improving. We've got the Australian dollar, the Kiwi dollar, and also the Canadian dollar all higher. Commodity prices, look at that oil price rebound, 5% back up again once more. Is this the point at which we start to see the oil price rallying? Question marks surrounding obviously risk appetite and the sustainability of that move, and certainly for now we can see that markets are reacting positively, but how long does that positive response come through? Question marks certainly. In terms of data points, well, there are no central bankers today. Michigan sentiment, interesting. Michigan sentiment, something to keep an eye on, certainly, I think, is how the consumer in the States responds to this coronavirus outbreak that is obviously sweeping through the States now. 100.9 actually, down to 95, so quite a big decline, but still in the context of where the Michigan sentiment actually has been, well, not too bad actually yet. So that's certainly the consumer indicators in the States, 70% of the US economy, FYI. Consumer indicators are very important and will be subsequently something to watch in the weeks and months ahead. Right, so let's have a look at my chart of the day. Dollar Swissy. Now, dollar Swissy, as I said, there was this massive overnight funding issues, which sent the dollar sharply high yesterday, even against the safe haven Swiss franc. And with risk appetite improving today, with the Fed operations in place, we see the dollar continuing to rise, the Swiss franc now falling. So we've seen this rebound and this retracement move that's going on. 23.6% fib holding above that, and moving 38.2% fib of the big, November to March sell-off. That is coming in at around 95 figure. The old floor, look at this old floor of sort of 96 figure, that old floor from January, starts to come back in as resistance, and that is a fairly reasonable rebound area as these momentum indicators unwind. Buy signal cross on the RSI back above 30, stochastics similar, RSI MACD line starting to tick higher. So there are signs of this recovery on dollar Swissy, but again, another interesting chart to watch as the market starts to engage in a bit of a recovery and the dollar, specifically the dollar, starts to recover as well. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.